Bitcoin up almost 3%, back above $20,000 after initially being below 20 in the 19s. People were becoming extremely fearful. But is this a real bounce, or is this just a bull trap with further extended moves to the downside expected? We're going to analyze the charts. We're going to see what data is showing us, what conclusions can we draw from this. At the end of the day, guys, nobody knows the answer, but we can get the data to try give us the best probability of understanding what's going on. So if you're watching any crypto YouTubers who are telling you clear, bold statements of this is a bear trap, this is definitely going down, you ultimately know you're getting advice from the wrong person, because somebody who's honest with you will tell you we don't know. We can only put the probabilities in our favor and analyze the data in front of us. Let's get straight into this, because it's quite exciting today. Everybody's a little bit pumped today. We're getting this green day at 2.8%, but I just can't buy into it. I'm going to show you why, what I'm seeing in the charts, why it gets me a little bit nervous. And look, I may be wrong. I'm also going to explain where I think if we do get a little bit of a move in the green, how far this can go before some serious resistance starts pushing us back to the downside. Now, let's just pause for a quick second here. We need to remind ourselves what happened. And what happened was, here on the daily chart, let's just tidy this up a little bit. Let's remove our Bollinger Band. We'll come on to that shortly. But what we want to remind ourselves here is we had a really horrible day over the weekend, right? A 3% down day on equity markets, plus devastation caused by Jerome Powell. If you've not caught up on what happened, go watch my video from Friday. I did a quick summary, 8-minute video explaining exactly what Jerome Powell said. You should watch it in ×2 so you get the points really quickly. And then you understand that Jerome Powell meant business. He came out reminding the markets that, look, now is not a time to rally. Because when he spoke in July, he came across a little bit dovish, and that's why we saw equity markets start to get a little bit excited. We saw Bitcoin start to trying to break out and get towards $25,000. And so Jerome Powell came out very hawkish and reminded the markets that, hang on a second, he means business. And so you can see now, this is creeping up. 65% of the market is now pricing in 75 basis points, when initially it was the opposite. That type of percentage, 70% plus, was expecting him to reduce his next rate hike to at least 50 basis points. Right, so now the market's going, okay, we were too premature. So in essence, what you had was the market was putting one foot in the risk-on camp, right? And that's why we started seeing a little bit of a summer rally. But then what they've done now, that Jerome Powell's bringing, they've just quickly taken their foot back off and say, oh, no, we're back to risk-off again. And therefore, Bitcoin's going to see that pain as well. Now, I'm going to come on to why we're seeing a green day today and whether I think it can last. But that's what we're seeing in the macroeconomy. Another thing I want to share with you is this. This is an interesting piece of data for you guys to look at. Because when 3% down days have occurred on Fridays, the S&P has averaged a decline of approximately 1.5% on the next trading day, which is a Monday. Okay, so you can see here, it's the only day, Friday's the only day where if you have a 3% fall in markets, historically, you've seen another big red day on a Monday as well. It doesn't happen. If you have a 3% down day on Monday, Tuesday doesn't tend to be that, right? You can see Tuesday is normally pretty flat. And same on if you had a down day of 3% on Tuesday, Wednesday is normally flat, okay? So you normally see that. But this is the only day. Now, that's interesting because when I come on to look at the markets here in the open today, we're seeing that the markets are red indeed, and Nasdaq is already down 0.7%, 0.6% on the S&P, and Dow Jones opening up red as well. But then how is it that Bitcoin is moving 2.8%? And this is what gets me a little bit concerned, right? That's the first thing. That's the first red flag for me. Is up until this point, when equity markets have had a red day, Bitcoin's had a red day. When equity markets had a green day, Bitcoin was struggling to have those green days during this brief rally. And so now we're seeing that Bitcoin's having these green days when equity market's having a red day, which just doesn't make sense. And that's what makes me think this is a temporary move with just a little bit of an imbalance in buyers and sellers right now, causing this brief pump here. So the other thing which backs up my thoughts here is the volume candle, okay? And on the daily candle, we still have 10 hours left or so, and maybe this daily candle can get some serious volume. But if this is going to be a serious reversal with serious intentions of starting to work our way back up, I'd want to see bigger volume. Even if we come down to the 4-hourly candles, you can see this is the main candle that's giving us the bounce. Right? If I look at that candle, look at the volume at the bottom, it's not the best of volume. Again, 2 hours left of the candle. Can it come and create a bigger candlestick? That will give me more confidence in this bounce. Okay, so let's remind ourselves of what pattern we're in, right? We broke down from our greater trend here, our big trend, we broke down, then we consolidated. Jerome Powell gave us the ignition to break down further some more. We then consolidated in this period. Let's just zoom into about there. So we consolidated a little bit more, right, around the 20,000 level. We knew there was going to be psychological support at 20,000. We broke below it over the weekend. You've always got to be cautious with that on the weekend because you get weekend low volumes. And then we've started to see a little bit of a pump here on a Monday, but again, very decoupled from the equity markets. Now, if I then show you the 4-hourly EMA ribbon, you'll see we're running into our EMA ribbon. So even if we do see a little bit of a move here, you have got your 4-hourly EMA ribbon, which will be acting as resistance. Okay, so I will expect this to start acting as resistance. I can also bring out the 4-hour Bollinger Band. You can start seeing that the Bollinger Band, we're heading into the middle of the Bollinger Band, which can act like resistance. You see, we've run into that and consolidated into that before struggling to then build any significant momentum to the upside. Now, if I look at the same thing from a daily perspective, things get even more interesting, because what I'm thinking is if this is a little bit of a relief bounce, where can this bounce go to? And I'm thinking the maximum I could see this relief bounce go to is kind of up towards the top of the channel at 22,000. That's when I expect resistance to come in. Because on the one hand, you'd have your daily EMA. Okay, you can see the daily EMA also comes in at that point as well, the same level at around 22,000. And you'd also have the center of your Bollinger Band. So if I move the daily EMA, you see this red line, that's the center of your Bollinger Band, which again will act like resistance. So if we are seeing a relief rally, that's where I'd see it. Chances for me are we're still going to head to the downside. I expect this to be like a little bit of a consolidation similar to this before then a greater fall. I mean, we've got to pay respect to the fact that the bears are in control. So, you know, expecting a crazy relief bounce here when there's no reason to be risk on right now is a little bit foolhardy, right? We'd have to, you know, give the benefit of the doubt to the bears. Equity markets are down, risk is off. Jerome Powell came in and gave the market a reality check. So I can't think of a reason why Bitcoin will want to go on a sustained rally here and decouple significantly. So that's definitely something to watch here. Okay, so that's what we're seeing there. Let's also take a look at the dollar index. It's also important to look at the dollar index to see what could be causing this. And this is where you get your clue. Right now, this is where you get your clue of why Bitcoin is managing to have a positive day today. Remember, your dollar index is inversely correlated to Bitcoin. It does the opposite. When dollar index has a positive day, you see Bitcoin struggle and vice versa. So this was the Friday, huge day for the Dixie. It started off really negative in anticipation of Jerome Powell, but finished the day really strong because the markets were going risk off. So good for the dollar. Right? Today is different. We're seeing the dollar index fall quite significantly here on the day, which is what's allowing Bitcoin to get a move. So this is something that we have to keep an eye on. Is this just a cooling off from the Dixie? And are we going to get a bigger, more sustained move to the upside? You can see the EMA ribbon is here. Dollar index has been on an absolute tear here. So we've got to hand it to them. Maybe they want to have a little bit of a cooling off down to its EMA ribbon before then going and posting a new high. Right? The only positive scenario we can have here for Bitcoin is if dollar index creates a really big double top pattern. So from a technical perspective, if it gets rejected from this level and comes all the way down towards this kind of a neckline, that would be huge for Bitcoin, right? Because then you have the risk of breaking to the downside. So that's something I want to look out for is, do we see that extended move on the dollar index to the downside? Because that could then give you a more significant rally on Bitcoin. But if this is just a slight red day here on Bitcoin, it could just be a false alarm. It could just be a bull trap waiting to get you guys liquidated, the eager longs liquidated to the downside. So there you have it, guys. Interesting day here on Bitcoin. A 2.8% green day, yet we still can't celebrate it because Jerome Powell came out extremely aggressive, reminding us that the markets are risk off. I expect the equity markets to continue to show a little bit of pain here until we can get some positive catalysts of moves to the upside. I do, however, maintain that this 20,000 level on Bitcoin is a really important level. If we lose that level, we could be heading down to that 19,200 level, possibly the 18,700. If we lose 18,700, which is the bottom of the channel, which I've been speaking about a lot on this channel, then I need to get myself prepared for 17,600, which was our low. That's my game plan right now. If we see those progressively lower prices, I'll take those opportunities to dollar cost average in. I'm not chasing any of these green candles on 2.8% green days. I think it's best to sit on your hands. There's nothing to do. Sit back. Don't chase those green candles. That's my game plan for today. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe if you appreciate this type of content. Let me know in the comments. Go watch my video here where I explain exactly what the scandal of the day is in terms of Avalanche and why is Avalanche struggling so much over the last few days. There's a big hit piece being put out on Avalanche, and I dissect whether I think it's FUD or if there's some real data in there which we need to be worried about.